Everyone thinks the future is so negative. There's an article in the Wall Street Journal. The bearishness among individual investors reached 47.3%. They're so worried about whether the trade wars are going to happen, whether interest rate cuts are actually going to occur, and what is going to happen with inflation. All those things are worth paying attention to. But ultimately, you have to ask yourself, are you a day trader or are you a long-term investor? Naturally, if you're a long-term investor, you don't care what happens in the short term. This is all noise. Let's take a look at something like inflation. Inflation is currently 3% year over year. That's a lot of reason for people to say, well, maybe the Fed is actually not going to cut interest rates any further. Whether the Fed cuts or they don't, it's not going to matter. Do you know why? Well, the stock market is actually up to start the year, even though the Fed has actually decided not to cut interest rates further. And so any time that you hear that everyone else is bearish, it goes back to that old adage, that Warren Buffett quote, the best time to actually be greedy is when there's blood in the streets. And so those are the types of things that I think people get wrong about the stock market, is they go and they look at what everyone else is doing, and then they try to mirror it. Instead, a great rule of thumb is to see what everybody else is doing and try to do the opposite. And so when I see something like this where everyone is bearish, 47% of people think that the stock market is going to be lower 6 months from now, that tells me that maybe right now is the time that you should actually be paying attention.